So, guys, it's really nice to have you here. It's nice that you take some time to have a conversation with us. At first, can you tell us a little bit about yourself? What is your background and experience in Web3?
Sure. Yeah, I'll kick that off. Hey everyone, I'm Adam Nucky. I'm co-founder of Dolomite. I originally got into crypto in 2013. Back then, Bitcoin hit $1,000 for the first time, and a programming forum that I was active on started talking about crypto, and someone was building a really early crypto project. It really was very terrible looking back at it, but it was a good intro to the space. I was able to help out with improving the miner, and it really got me interested in it. Kind of was amazing to me that my computer could be kind of part of this network and I could mine something and it would have value to others. And so from there, I was in and out of the space for a little while. But it was 2017 where things started to really ramp up. The whole market was getting a lot hotter and people were trading a lot. And so were Corey and myself. And we were starting to trade every day, wake up in the middle of the night to check prices. And we just hated the experience on centralized exchanges. There were this enormous number of hacks, of fraud. These exchanges that in the past had been dealing with just a couple $1 million in volume, we're now seeing hundreds of millions, and we're just running off with the money. And the exchanges themselves were just not built for it from a user experience perspective either. So we started to explore other technology, other alternatives. And that's what led us to decentralized exchanges. At the time, really just Ether Delta, which if anyone has used that, it was not a good experience to really use that either. But we saw the potential in the technology. And by that point, Corey and I had been working together for several years, doing side projects and hackathons, and just found we worked really well together. And so at the very, very start of 2018, we just dove in and started building a decentralized exchange on a protocol called Loopring. We were the first to be building a decentralized exchange on Loopring, one of the first in general to be building a decentralized exchange. I can't even say in DeFi, since DeFi didn't exist as a term back then. Back then it was open finance and did maybe $5 million of trade volume across all decentralized exchanges on a good day. But we got investment from Loopring in April of 2018 and used that to build out a early version of Dolomite. Now, this is different than modern Dolomite. This is, back then this is pre-Aave, pre-Compound, pre-Uniswap, really. It was a very different paradigm, one with off-chain order matching and on-chain settlement. And it worked well. We found some product market fit, but over time, as the protocols that really shape DeFi today started to arise and things like AMM pools started to come out, we saw that the market was going in a different direction. So we ended up spinning down that version of Dolomite in, I'd say, like late 2019, early 2020, and started building our modern version of Dolomite, which is much more of a money market, but still with many big trading features in there, and just built to be a money market for the modern DeFi landscape, one that goes much further than something like Aave or Compound, that supports the wide range of assets and features that exist in modern DeFi. But I'm getting way ahead of things here. Corey, I'll throw it over to you to talk a little bit about your background.
Sure. As for myself, I'm the other co-founder here at Dolomite. My story with crypto is I got started in 2015. At the time, I was still in college with Adam, and I was essentially modding and exploiting a particular game. The company whose game I was modding shut me down on PayPal, so I started taking Bitcoin then for payment, and that's what got me more involved in the industry. Got to see what was going on, and as Adam noted, as the rise of Ethereum smart contracts became more popular in 2017, it was a natural place for us to progress and look to apply our skill set then in computer science and engineering. Fast forward to where we are today, Adam and I have been working closely with each other for about 10 years now. You don't really see too many founders in the industry that have such a long history with each other, and very happy to be working with him and to share the journey with him.
Yeah, even just to be working this long in the industry, we're finding isn't that common. We've been doing this full time for 6 years at this point, somewhere around that, maybe more. So yeah, it's been quite a journey. Back in 2018, we were pitching to investors, and a lot of times we had to explain what MetaMask was, what a decentralized exchange was, why anyone would want to use a decentralized exchange, especially when there was very low liquidity and volume. We'd say things like, in 3 years, it'll have $100 million of trade volume across the whole decentralized exchange space. And, we kind of were only really maybe half sure that that's where it would be. But little did we know, just a few years later, Uniswap would cross $1 billion in trade volume. And it's just been crazy to see how much the space has grown.
Yeah, that is quite a journey for you guys. And I can see it from here that you've got a great connection between you guys. We can see that you've got a long relation, and it works quite good, I think. All right, so let's talk more about Dolomite. And can you explain us, firstly, just imagine that we are fresh guys in crypto. We spent a few months here, and we got some capital maybe to park somewhere. And for someone who's starting in this industry, how would you explain Dolomite, your protocol, and what can we do there?
Sure. I'm sorry, Corey, do you want to take this one? You're free to.
Yeah, I can start these off. And I mentioned this to Adam, but just want to make you guys be aware. I do need to leave the call in about 18 minutes or so. At which point, Adam will fully take over. But I figure I want to get my couple of words in here or there before I jump off. But
great.
Yeah, sure. So just diving in though, Dolomite, as Adam noted, it's a lending protocol. So you can come to us for really one of two reasons. Simply put, you can either be holding ETH, USDC, or other assets and want to earn interest on it by putting it on our platform and therefore lending it out for other people to borrow it. Or you can come to our platform because you want to open up a borrow position, or maybe more than one borrow position, and take on some position, take on some strategy that you think will earn you yield or earn you money from price moving in a certain direction, something of that nature. And so what we built Dolomite for was, simple use cases like this. But being the DeFi degens we are ourselves, we also know that the DeFi economy has become much more robust over time, and now we have tokens that you hold that you can stake, claim rewards, compound rewards, vote with, etc. And it was important for us to build a lending platform that you can continue to do those things while actively borrowing against them on our platform. And so one of the most unique selling points that Dolomite has to offer compared to other lending protocols in crypto is that we are the only place where, like I said, if you have an asset that has DeFi functionality attached to it, like I said, voting, staking, claiming rewards, or other things, you actually can continue to do that with those assets while you're actively borrowing against them on Dolomite. And most platforms make you give up that functionality in exchange for tapping into whatever financial services they offer with those assets. And we really wanted to make sure we had a platform that embodies the best of what DeFi has to offer in that regard. So considering a lot of things with DeFi revolve around yield and yield generation, a lot of that native token functionality I'm mentioning revolves around being able to, claim that yield or earn that yield that you are privileged to earn because you hold an asset that accumulates it. So we see a lot of different use cases on Dolomite, ranging from simple ones, like I said, just lending out stable coins and earning interest, to more sophisticated ones like people running delta neutral strategy and other wacky stuff in order to capture the most yield possible from a strategy that they identify.
All right. Can you explain us a little bit more how you managed to put there tokens that you can still vote, you can still get some yield from this token and use it in your protocol? How does it work?
Yeah, absolutely. We built out this really novel thing called virtual liquidity, and it's the basis for a lot of the innovations that Dolomite has to offer with it. One of the things I didn't even mention yet, but is a unique selling point, is that Dolomite can list hundreds, if not thousands, of assets in the core protocol with the same very capital efficient pool environment that people know and are familiar with Compound and Aave. And so what we were able to accomplish with the voting side of things is we basically built out a credit account system where you come to our platform with one of those tokens you can vote with, let's say, the Arbitrum governance token. And when you come to our platform for the first time, it'll prompt you to create a smart vault for that asset, which means that those assets sit inside a new smart contract that you own and only you own. And those assets sit in there. And what happens with those assets from a blockchain perspective versus how our system allows you to borrow against them are actually seen as two different things. Usually those two things are very closely linked with each other. But when it comes to like how Arbitrum allows you to vote with your assets, what they care about is how many tokens you hold. And so this credit account system aggregates or pulls together all the Arbitrum tokens that you have on Dolomite into this one place that you own and only you do. And no one can borrow them, no one can flash borrow them, no one can touch those assets under any circumstance, which means that no one can essentially mess with that DeFi functionality that you're earning. This isn't some weird environment where like you put up tokens to go borrow against them and doing all this stuff, but then someone can take away your DeFi rights by borrowing the assets and essentially taking them away from you. It segregates them like you would want to see from a smart contract perspective in order to ensure soundness in the integration, but also security for users that they have that peace of mind. And so with that, like when you open up any positions on Dolomite, it's always doing that, viewing how much in total you have in assets in that credit account to go ahead and do so. So you can have, first of all, when you come to Dolomite and you deposit in, you get what we call a Dolomite balance. Your Dolomite balance is like a funding account that you see on a centralized exchange. And you can use that Dolomite balance to open up as many borrower positions as you want, or access our other financial services that may come out in the future with it. So if you have 10 ARB tokens deposited, for example, you can have 5 sitting in your Dolomite balance, and then 3 in a borrower position, then 2 in a separate borrower position, totaling 10. And our system allows you to still vote as if you have 10 tokens. It does not matter that you have your tokens spread across the platform in different places. So lots of flexibility that our platform enables. It really streamlines the user experience with that DeFi functionality portion to make sure you're always able to get the best that your tokens offer to you. And we're able to offer some really cool prime brokerage-like functionalities where you can borrow against your assets or earn yield super easily simply by depositing into our platform then.
All right, that's very interesting. That's really interesting. Okay, going through your docs, I can see that you got this architecture that is 2 layers. So I want to ask you about how does the 2-layer architecture, this core and module, benefit Dolomite flexibility and scalability?
Yeah, I love this question because it really allows us to touch on our security mindset and how we've operated Dolomite for the past couple of years since we've launched. So first and foremost, we designed Dolomite to be modular, and this is a new paradigm that we see more modern lending markets tapping into in order to offer like a more contemporary or like next generation experience in the lending world. And Dolomite, we're very proud, is one of the first to bring this idea to market. And the premise behind it is we have a core layer that's like super generic, and it basically establishes all the rules for how our system works. The fact that you need to make sure you're over collateralized when you open a loan. If you go underwater on the loan, how you might get liquidated or margin called in order to maintain solvency. All the basic things like interest rates calculations as well, and any other risk modeling that comes along with it. These are all really important things that define how a lending market might work. And so all of those things that establish these primitives, if you will, exist in the core layer. And the beautiful thing about the core layer is that it's immutable. We cannot change it. We cannot upgrade it. We can't do anything that would change those rules around and how they're governed. There might be tweaking of certain parameters that can be changed, but we can't deploy a new upgradable smart contract to completely change the rule set or anything like that. Everything that's changeable is predetermined, and we cannot go beyond any of those rules whatsoever. And that's actually, when you think about it, one of the things that made Uniswap and some of the other DEX protocols so successful was this idea that they deployed an immutable decentralized exchange. So when you had all these different other protocols building on top of Uniswap and adding to its network effects, they were able to do so with confidence because Uniswap itself could never change. And as a smart contract engineer, all you had to do was read their code once and essentially understand it forever then. And we wanted to take that same concept and apply it to Dolomite because we've seen, unfortunately, plenty of instances where like lending protocols get hacked. And it's usually because they take something that was very, very core to how the system worked and they changed it. And they might have worked really well for a year, but then they changed it a year later. And so like it changes and it kind of rugs the user experience that users were expecting from a security perspective. So it's our way of establishing an assurance that we can't change how that core protocol functions. We can't change it for the worse or for the better. And that's really important for how we feel like the DeFi environment should operate in a lending context. Now, the second aspect of this, which is the modular layer, this is how we're able to upgrade the system to introduce new features over time that we think are really important. So when we list a new asset that has DeFi functionality, we're able to do so through this modular layer that plugs into the core layer. And so what this means is like we can roll out new features over time and new capabilities that augment the capabilities of Dolomite in certain respects. And we're able to do so in a way that doesn't contaminate other modules. So there's able to be like an arm's length separation between how these different modules might exist. So we are able to whereas you see other teams, like they roll out, version 1, then they go quiet for a year or two and they build version 2, then version 3. With Dolomite, it's just continuous shipping of we've rolled out our version 1, and instead of rolling out version 2 and version 3, we're rolling out new modules that sit on top of this system that are able to, enhance it in certain ways or introduce new capabilities or stuff that users want. And so that allows us to develop things more quickly and with a higher confidence in its security because, like I said, we're not changing the core layer and how the rules work. We're just plugging in new modules that allow us to enable new features that get users excited.
All right, gotcha. Now I want to ask you a little bit more about capital efficiency. Can you elaborate on the use cases for Dolomite internal liquidity system? You wrote something about scenarios like USDC DPEG.
Yeah, so this is more of the theoretical side of things with how Dolomite's able to really utilize the virtual liquidity system. When you think back to the March USDC DPEG event of 2023, if you were depositing USDT into Aave, it was very tough to get that USDT out, unfortunately, because everyone wanted to borrow it in order to leverage up their exposure to USDC and pray that it was going to repeg upwards and capture the price movement. So what we ended up seeing was a really poor user experience where if you wanted to withdraw your USDT because you didn't like the risk, then you weren't able to get out. And it's a really unfortunate circumstance where liquidity crunches like that put users into a really tough scenario. And so with Dolomite's internal liquidity system or virtual liquidity system, users could have in that circumstance swapped their USDT for ETH or a different asset and then withdrawn the other asset from the system because virtual liquidity, the reason why it's virtual is you're actually not exchanging the actual ERC20 tokens. You're changing ledger balances within our protocol. And the end result for that is you don't need to actually have that liquidity there if all of it's being borrowed and withdrawn from the system. So it enables people to change assets and otherwise swap assets around. So maybe you couldn't withdraw USDT, but you could swap that to ETH and withdraw ETH from the platform super easily then. Plenty of possibilities like this emerge. And ultimately, I think it's a really cool way to address some of lending's toughest problems.
All right. Now I want to ask you a little bit more about flash loans that you got available. So what innovative use cases do you foresee for fee-free flash loans in Dolomite?
So with Dolomite's flash loan system, first and foremost, they are free and always will be. It's built into the protocol at the core layer. And one of those rules at the core layer we can't change is that flash loans are free. And this enables users to margin trade and do other neat things where they can open positions initially under collateralized but by the time the transaction settles, they're actually fully collateralized with their position. And so this enables some really cool things that we currently have released, like our Zap feature, where you can, for example, borrow USDC. Well, actually, let me give a better example. Let's say you have $100 worth of ETH deposited. Normally, if you borrowed $200 worth of USDC on any other lending platform, you couldn't because you'd be underwater. But if you wanted to take that USDC and swap it to more ETH, that would be allowable because you'd actually end up having $300 worth of ETH and only $200 worth of debt. And so what our flash loan system allows you to do is actually just this. You can actually, like, in one click, using our Zap system, borrow USDC, zap it to ETH, and recollateralize it all in one click. I mean, I'm saying it, and like just saying that sentence takes longer than how much time it actually takes to go press the button on Dolomite and do it for you. It's actually just that easy. But for users that are a little intimidated by this, we're actually working on a really cool thing that we're calling the strategies page, which, you know, I'll leave to Adam to tease a little bit and what that will enable for users. But it's something we're very excited by.
Yeah, I'd be happy to go into that one now if you want.
Sure.
Sure. I mean, I have to get going in a couple minutes, so might as well start handing you the torch.
Sure. So strategies page, essentially, Dolomite in its current state offers a lot of flexibility and features and control, but that also means a lot of complexity, which can be challenging for people who are newer to DeFi and not familiar with all of the complexities of lending protocols and looping and flash loans and all these sort of things. So we've just taken all of the steps that are involved in creating these strategies, as well as picking which assets you should use to try and create a good strategy, taken all of that and put that into something where all you do is deposit and click a button and it does everything for you. So that could be something like performing some delta neutral loop. So you'll earn yield without having to worry about price exposure. And because it's doing this loop of borrowing and adding as collateral, it could push the yield up to 30% APR in the form of something that's ETH denominated or something stable coins. There are a variety of strategies that we're building out. And the nice thing is we'll be able to keep adding new strategies as we continue to add new assets. But the main point is that it'll be incredibly simple to utilize all of the features and complexities of Dolomite.
All right. Gotcha. Thanks for that answer. Okay. I'm going to start some other random question and want to ask you a little bit more about your business model. So, how do you earn money on your protocol, and is it enough to cover all the expenses for the team and everything?
Yeah, so we have several ways that Dolomite can take in revenue, and I say can because we don't have all our fees turned on. But as a lending protocol, we could take fees from the difference between the amount that is being paid when for borrowing and the amount earned for suppliers, as well as a whole other list of fees. But the important aspect is that right now we don't have any of our fee switches turned on, and we are currently funded by money that we've raised. Dolomite has gone through several funding rounds. There's the one that we mentioned in 2018 from Loopring, but more recently, at this point, perhaps a year ago, I need to double check, we raised $2.5 million from a variety of VCs, including Coinbase Ventures, and I could share the link actually in the chat if you wanted to learn more about that raise. And then more recently, raised another $900K from more of a creator round, is what we called it, which was more of KOLs and people who are more deeply involved in the DeFi space. So right now, the whole purpose is just to keep costs as low as possible for users and really just focus on growth. And that's where things are right now. But over time, we could turn on several fee switches to start taking in revenue, a lot that exists in standard lending protocols. But on top of that, because of the trading features we enable, it's possible to add other fees along the way.
Okay. And how big is your team?
Currently, we have, I think it would be 6 right now. We have 4 developers. We have someone working biz dev, someone working socials, a couple of moderators, and someone who we work with part-time as well to do some other operational tasks. We'll be looking to continue to expand the team size, mostly developers. That's really our focus at the end of the day. Is there are some projects in DeFi that they sort of just build out their initial project, and a lot of it is marketing and business development. But Dolomite is very development heavy. Well, all our integrations involve a lot of development work to make these deep, unique integrations that can continue to support all of the features of the assets that we integrate. So we like to have the developers to support that. And then for building out new things like the strategies page, and coming down the road as well, which I could talk about, is the trade page. Things like that, we like to have the front end developers as well. So we'll be looking to continue to grow.
All right. So now you mentioned that you are focused on growing, on getting new users. So I want to ask you, what is your strategy to bring more people to your protocol? And I would like to hear some specifics. So maybe some nice strategy, not like everyone is just saying that they will put some content in their internet. They maybe do some articles, something like that. Do you have like this really good marketing strategy for that?
Yeah, I think I can have specifics that help. Oh, sorry, Corey, you want to throw something in there?
I just want to say thank you for having me, and you're in good hands with Adam here. So, thank you again, and looking forward to hearing about how it went from Adam afterwards. So, talk to you guys soon.
Catch you later, Corey.
Bye.
Thank you.
Yeah, in terms of strategy, really it's a couple of things, but I'd say the main strategy is through working with partners. That is really the core of a lending protocol at the end of the day, is that a money market like Dolomite can't exist in isolation just by itself. It needs other projects with assets to list. A money market only exists to provide extra functionality to those assets and those protocols. And so that's how we approach things as well when it comes to growth. We find interesting projects that have good communities, good assets that either produce high yield or have some interesting features, and we'd like to integrate those and then work closely with the communities of those assets, of those projects. We'll do things like AMAs and Twitter Spaces to share things about the tech and the integration. We'll do some co-marketing. We'll try and share our community with them and their community with us, and it really helps everyone grow and learn more about what's out there in DeFi. And for people who are in the community of the project that we are integrating, just knowing that there's a money market now that supports their project's token it's extra use for them. It's extra utility that they could now use their assets somewhere else and either loop up exposure or just free up some capital by borrowing against it. So that, I'd say, is first and foremost how we go about it, is through these co-marketing partnerships. But outside of that, it can be things like working with the networks themselves. So, for example, right now we're on 4 networks. We've been on very good terms with Arbitrum, but even more so with Mantle when we've launched there just recently. Things are still in the early days with other chains like XLayer, but we're very close with their development team, and they'll be doing a lot to help promote Dolomite. And the biggest one of them all, I'd say, is Berachain. We're currently live on their testnet, and that one is we're going to be working very, very closely with them, and I think that's one to keep an eye on. And so they'll be doing a lot to help promote Dolomite as well. And then I think outside of that, it can also come down to rewards as well. Like on Arbitrum, for example, we applied for the Arbitrum STIP grant, and that has allowed us to have a rewards pool for our users. And, this is one where it's, you could advertise all you want, but at some point at the end of the day, people care about rewards and yield. And so by being able to offer higher rewards, higher yield, that's something else that we do to help attract people to Dolomite.
All right, that sounds good. But you said that you are on a few chains. It's nice to hear that you are coming to Bera chain because it's gonna be, I think, quite hot in the future. But there is no mainnet, and on the mainnet it's the big game. There is the capital, there is everything, there is a lot of tokens. So do you have a plans to go to mainnet, or do you consider it to boomer chain? And maybe it's, you know, it's too expensive to go. Not nowadays, because now we had like way half 0.5 it's way or something like that. But you know, in the future it will go up. So is there gonna be mainnet for Dolomite?
It's really the biggest challenge is what you just mentioned, the cost, the expense. You know, we'd love to go to mainnet, but and we might do it one day, but realistically, it would probably be only for whales, just because of the gas costs, especially at times when we need to liquidate. It's a lot easier on a layer 2. You could do transactions very quickly, very cheaply. So even when the price is moving quickly and everyone's trying to sell or trying to buy, you could still get a trade in, although the prices can go up quite a bit. I recall recently when Ethereum was dropping from the 3,000s down into the 2,000s. You know, I was trying to sell on Arbitrum, and the gas fees were something like $200 to put that through. On mainnet, I'm sure it was even more. So it becomes a real challenge to liquidate, especially liquidate smaller positions. So it just hasn't been a focus for that reason. And this kind of comes back to the core of how Dolomite is constructed. And it's that there are some protocols that really aim to keep costs as low as possible. And especially if they're running on mainnet, they're really just trying to say, how can we do the lowest possible gas costs? But we built ourselves to be on a layer 2, and in doing so, not care about trying to cut gas costs as much as possible, but instead put as many features into each transaction as possible, which can raise the costs of gas. But when you're on a layer 2, that doesn't really matter as much. It still is just a few pennies. But when you try and do the same thing on mainnet, it just doesn't work as well. So maybe one day, but not for now.
Yes, those are good reasons that you mentioned. But from the other side, we still have like 20, 30 different L2, and it's really hard to raise capital and to bring some users. For now, we see that Arbitrum is going quite good after this time, after this airdrop. We still have a lot of dollars there. But from the other side, if you go to mainnet, like you said, you will attract only maybe only whales, but from the other side, you've got whales, you've got capital, you've got money from the fees, you've got a good vibe that you are safe, that people like to park money in your protocol, and that's can be really the best marketing you can get for the for the Dolomite, because when you see now that Aave is so popular, that finally people see that this is the biggest protocol. It's safe. It's really nice to put money there. You can sleep at night, and you don't have to wake up and ask your phone where is your money. So what do you think that putting Dolomite there could be like the best marketing strategy you can have if you get there a lot of capital and if there won't be any hacks?
Oh, that's the thing, is the biggest if we get a lot of capital there. But I think there's a couple of things with that. One is that I think the biggest thing that makes people trust Aave is the amount of time that it's been up without issue, without exploit. That's just one that has to be earned over time. And so far, Dolomite has been live for 2 years. We have, I can't say $0 of bad debt, but it's pennies of bad debt. It was a small enough amount that it just wasn't worth liquidating. But essentially no bad debt, no exploits to worry about. And so as we continue to operate like that, that's how we build up that trust that can attract that big capital. The big capital right now, even if the rates are lower on Aave, they still feel safer on Aave just because Aave has been around for longer. But over time, we can build up that trust and start to attract that larger capital. And that's why we have something like mainnet further on our horizon, both to build up that amount of time with Dolomite live without incident, but also to just build up Dolomite's profile and get larger, because if we're still small and we try to go over to mainnet, it's hard to pull in that big capital. We're just a very little fish. They don't in a big pond. They don't need to use us when there's bigger players that they could use. But if Dolomite is a larger player in the future and goes to mainnet, we could do more to attract that larger capital, which is especially, I think, important when it's really only a platform for larger capital on mainnet, because you can't build it up with little pieces over time. That's something where on Mantle, for example, we have maybe $5 million of TVL. It built up with smaller deposits over time, and we've been seeing larger and larger deposits as we've been on Mantle for longer and as it's become more economical, because that's sort of the trouble with a money market. It's very, it's got this chicken and egg problem where you need to deposit capital to have enough for people to lend, but you need people to borrow in order to have rates that attract lenders. It's sort of this cycle that has to be built up slowly. It's hard to have someone just deposit $100 million if there's only $1 million of borrowing, because the rates aren't going to be very good. So instead of being able to build up slowly like we can on a layer 2, on mainnet, we're hoping to come in a little bit later with those years of experience behind us, that people can trust Dolomite, and also just with more clout, with more brand recognition, and just bring in that larger capital all at once. But I think we'll get there. It's just right now we fit more into the layer 2 ecosystems.
Sure. I understand. It's good to have your perspective on that. I need to ask you about one thing, and I think you are, what is it? So, when token. When token.
Oh my God.
Is there going to be a token? Yeah.
Look, right now we're focused on growth. We're focused on features and integrations. That's really a focus. We don't have any specific token launch plans. I think eventually we'll get there, but right now I don't have some date for you. I can't tell you it's coming, a week away or anything like that.
All right. But another question. I think you know what it's gonna be. Is there gonna be an airdrop? Should people focus a little bit on
even
that?
Less. How can I even tell you what the parameters would be for a token that doesn't even exist?
That was just
you'll have
yes
if
or
any
no
of it will
question.
happen, you'll have to wait and see.
All right.
You'll have to wait and see.
We are Djs. We just want to know something like if there's something
everyone
in the
wants
air.
to know. I know.
All right.
Yeah, well, you're not going to get any good answer from me today.
Oh, damn. But that's still all right. That's still good to have some opinion of people that who are building in this space. And when I see your app, I see also the trade, something like the trade and trading update coming soon. So when is it gonna be? And to expand that question, I want to ask you, how does combining lending and trading improve user experience, and is it safer or is it maybe more challenging?
Yeah, of course. This is one that we're very excited for, because this goes back to, you heard the story earlier. In 2018, we were building an exchange. That was really what we built Dolomite for originally, was to build the exchange that we always wanted to use. And while Dolomite became more of a money market, it's still something that has been on our mind. So once we wrap up the strategies page, which is incredibly close to being done, we may be opening it up to some higher level users over the next couple of days even. But once we're wrapped up with that, we're going to go over to the trade page. It's been under development. It's partially done, but we'll get that one wrapped up. And the trade page is going to be built for margin trading, which is how we do the combination of a money market plus trading is really the goal. But it will still work for spot trading. What it is it's utilizing this feature on Dolomite called Zap. And what Zap is, it's a meta aggregator. It takes in multiple DEX aggregators, as well as direct integrations with the protocols that we integrate. So for some assets, you want to trade on DEX, but on other assets, you want to mint or redeem directly with a protocol. And instead of having to figure that out yourself or go to the right web app and do that. It's all encompassed in this thing called Zap, and it lets you swap between any of the assets that you have deposited on Dolomite, even if that swap is first going through a DEX and then redeeming on a protocol. And we utilize that in places like the borrow page, where people can swap their collateral without paying back their debt, or easily, what Corey was mentioning, in one click, get leverage. On the trade page, you'll plug directly into that for spot trading. Just it gets you basically the best available price. It's what I use for all my trading. But the other thing is for margin trading is where we utilize the lending and borrowing of Dolomite. So when you want to gain, price exposure to ETH, you might be doing that by borrowing USDC and then swapping that into more ETH. And so for that, you're utilizing all the lenders on Dolomite, as well as taking advantage of the supply rates for lending on Dolomite. So when you're holding open some margin position, you may also be earning great yield just because whatever you're holding is being lent out at a very high rate. But one of the biggest things is that many of these margin trading platforms and perp platforms are very limited in the asset combinations. Often it's very US dollar denominated, and maybe it's only just the major ones, your ETH, your WBTC, those kind of things. Dolomite, we're going to be trying to support every single asset for margin trading. And so that can mean you're trading ARB against ETH or Link against Uni or any of these things. It's where you could find very unique alpha where you notice that one asset is always going up against another asset, or almost always, and you just want to open up a margin position and earn that over time. And some of them are simpler. I mean, I was looking at ARB's price against ETH while testing the trade page, and it was generally just a good move to be long ETH and short ARB. It just is a horizontal or diagonal line down. So being able to take advantage of those sort of trades, that's what we're looking to do with the trade page. And it will provide you with all the trade page, all the trading tools that you would want. Things like a full trading view chart, seeing the trade history of people swapping between those assets, seeing your profit and loss, all those sort of aspects that right now are not built into the borrow page, because the borrow page offers more flexibility. But that flexibility also means we can't really tell you things like profit and loss, because you've been withdrawing and supplying assets. It becomes impractical. Same thing for charts, but trade page is built for that. We almost see it in terms of complexity. The strategies page is going to be the simplest. You just deposit and you earn yield. Then the next most complex is the trade page. That's where you could, margin trade. You need to be aware of, your health factor, making sure you're not going to be liquidated, but you could also means that you could leverage your own yield or gain some great price exposure, take advantage of some unique alpha. And then on top of that is the borrow page is the most complex. And theoretically on the borrow page, you could do all the same things that you could do on the strategies page or the trade page, but it's a lot more manual, but you have a lot more control. And that's the trade-off.
All right, that sounds good. So I've got some questions from the chat, and there was one that is asking about your edge in the industry, but I think you explained a lot about your project, and we know what's the difference between you and other, like the classic platform like Aave, but maybe let's put it in just like small like few sentences. What's your edge between like this Aave or maybe Spark, something like that? Why people should use your protocol instead of those?
Sure. Let's just list it out like bullet points. One is you can support many more assets. So back when Aave was made, people only really cared about ETH and WBTC and USDC. Today in DeFi, people care about a lot of assets, and people want to borrow against a lot of assets. Dolomite can support over 1,000 assets. Most lending protocols can only do 24, 36, somewhere in that range. So it means we don't have to pick and choose which assets we support. We could just take in everything, integrate with everything. Second reason, the depth of the integrations. The fact that we could support all of the features of these complex assets, vesting, staking, voting, rewards, everything that you would normally get with that asset off of Dolomite. You could do the same thing on Dolomite and borrow against it to loop into it or just free up capital. Third, I'd say is features. Things like Zap that lets you trade right within a borrow position often go beyond what you find on other lending protocols. Being able to swap your collateral without repaying your debt, or directly swap your debt, or loop up really easily, or with flash loans, as Corey was explaining before, or repay your debt, or any of these sort of things that to plug directly into protocols. A lot of that convenience doesn't exist on other lending protocols. And then in terms of other features, things like isolated borrow positions. That's one we didn't really go into, but on Aave, everything you deposit is acting as collateral for everything you borrow. On Dolomite, when you deposit to Dolomite, you're not borrowing against any of that. That's just their earning yield from lending. But if you want to start borrowing, you open what is called a borrow position. And it's sort of like using Aave with one wallet, but you could do that a lot of times on Dolomite. You could choose, I only want to use ETH as collateral, not all of my other assets, and I only want to borrow this amount. And it means that you could have some borrow positions that are very risky and some that are very safe, and also just balances that aren't being used for borrowing at all. And the safe ones are separated from the risky ones. So if the risky one gets liquidated, the other one isn't affected and your Dolomite balance isn't affected. It gives you a lot more control. And we found this is one that people love using, and everyone has multiple borrow positions on Dolomite. And that's just something you can't even do on many other lending protocols. So I'd say those are really the key features right now. But I like to think there's plenty of other smaller things.
All right. That sounds good. We got some, like you said, bullet points for that. And yeah, I had a question about isolation mode for collateral. But as far as I know, Aave in V4, there's gonna be isolation of the collateral. But yeah.
I think theirs might be, I don't know. I think I'd read up on it a little while ago, and I remember it being slightly different than how we use the term isolation mode. I can only speak to the Dolomite side. It's essentially just saying that it has certain limitations on what it can be used for. It keeps the protocol and the lenders a bit safer. It means that there's not mixing of multiple, perhaps riskier assets in a single borrow position. It's also just what enables us to provide all the things like the vesting and staking and rewards and all the functionality of the asset. It's just a functional part of the protocol. That's really why it exists. It's just for functionality and for stability.
Okay, gotcha. I got one last question from the chat, and there's going to be one about industry. But so the question is, what if one of the project gets hacked? This underlying project from that you work with.
Well, I guess it depends on what kind of hack, but if it's something that perhaps is an exploit and the price tanks, that's often what we see most, is just that it throws the price way off. It's something where that's why we keep certain supply caps on assets. It's for those sort of security purposes. It limits the exposure, and it makes sure that we can liquidate as fast as possible, even if we have to liquidate the entire amount on Dolomite. But that's also why we have things like isolation mode to try and limit risk between certain assets. And things like pause sentinel, which if a protocol recognizes that there's an issue, like for example, recently Pendle noticed it with, I think, PenPy, and they noticed that there was an issue, and our pause sentinel triggered and basically just locked the PT assets from any further borrowing. It can only be the positions can only be spun down. You can only pay back debt. Things like that triggering is also just part of our security suite there. But look, at the end of the day, we can't inflate a price that isn't of a project that had an issue. And if the token price is falling, the token price is falling. But we are plugged into all the best oracles. We're plugged into the protocols directly where we need to be, and we keep very reasonable supply caps to make sure that even in the worst case, we could keep the protocol solvent.
Okay, okay, all right. That sounds good. So that's all about the protocol. And at the end, because it's almost 1 hour, I want to ask you, what is the most exciting thing that is going on in the industry for you in crypto? It's like maybe some trends, maybe some protocol, maybe some chains. What excites you now in the crypto space?
Good question. So I think there's almost multiple ways that I can answer that. At a broad scale, I think anything involving real world assets is what excites me, even just when it comes to certain stable coins that we integrate that plug into United States T-bills, get interest from those. I think it's almost very basic and in some ways boring, but it's so just core to finance. And I think it's such an important step to be able to bring those sort of things on chain, and not just bring them on chain, but make them international. Someone in a country that doesn't even have a proper banking system or has some very highly volatile currency can get a hold of stable coins and use them to earn yield from these real world assets. I think that's so cool. In general, I love stable coins as my example whenever I'm pitching, why crypto is cool to someone who doesn't know crypto. But more on the, crypto degen side, a couple things that excite me there. One, I like in concept things like gaming that involves either NFTs or crypto, but I just hate how it's always been done so far. I think that at one point, sometime in the future, someone's going to get it right. But so far, it's just been too crypto first. I think what I've said is that, if you call your game a Web3 game, you've already lost. It needs to come from a good game first and then use crypto or NFTs to enhance it. I think that's something that could be applied to more traditional IP of the video game space. And I think there's some point in the future where we'll have games that are enhanced with, perhaps you get items as NFTs and then you could bring them across into a completely different game because it recognizes you hold the NFT. Or you perhaps you own a copy of the game as an NFT so you could resell it the same way you used to do. Back when video games were a physical thing, you could resell it. You could buy a used game, but not anymore. I think it could perhaps bring something like that back. But then in the most short term, Berachain is my answer. Very excited for Berachain. They have this incredible culture and community there. We're really going to be building there and really making a home there and being there from day one, building up with them. We've got a great relationship with their team and we've got some really big plans there. So I'm really looking forward to Berachain, and any new chain really needs to have that kind of community. Actually, not even new chain. I'd say any network like this needs to have a really killer community, because otherwise they're basically just burning incentives to try and keep people excited. But when the incentives dry up, so does the liquidity. But if you really got that strong sense of community, you could build something for the long term. And so, yeah, I'd say Berachain is my answer in the short term.
All right, thanks for sharing that. For sure, this real world asset seems to be really good for us and really good for people that are outside of the crypto. Some new opportunities, and with gaming, totally agree that, yeah, when there is like something like Web3 game, it's already losing when they call themselves like that. And Berachain, we'll see. There is some interesting stuff that they wanna do with the liquidity, how to bring liquidity and how to bring users. And there is like good memes for sure. That's really
they really love their memes there. But underneath it, their proof of liquidity system, I think, will be really great for incentivizing liquidity and incentivizing builders. And just looking forward to all of it.
Yeah, for sure. It's gonna be really interesting to watch it. Okay, so the last short question: what is your favorite meme coin?
My favorite meme coin. Good question. I think I almost might go a little boring and just say Dogecoin as a meme coin, just because of it's one of those things that started off with no aspirations. Like, modern day meme coins, people are trying too hard, but Dogecoin just started for the fun of it and has gone so far beyond what it could have ever been. And that I still love that to no end. And I have friends who were mining it back when it was worth almost nothing, and I had a bunch of it, but of course sold it off when it was still worth almost nothing. But I think that one probably has that place in my heart for my favorite meme coin.
Yes, I remember first time I bought some Dogecoin. I have no idea what is crypto and everything, but it was just popular on some website in Poland, and it was 2013, and I had like some money from the to just live because I was studying, and yeah, for sure now I would be maybe rich guy, but it is what it is.
You didn't hold on to it, huh?
No, because
that's
I took some times, and I start and trade a little bit like just for fun in 2013, and then I had like really few years, like 7 years break, and now I'm here trying to dominate the market. Yeah, but okay, I can see that we got the last question. So how many oracles do you have, or how good your work with oracles is? Because we know that if you need to liquidate do some flash loan, oracle is like the most important thing.
Yeah, absolutely. Oracles are so key. Overall, we try and stick with Chainlink when we can. That's really there is no better standard of Oracle than Chainlink, and we've been working closely with them for a long time. We were one of the first members of their build program. They're sort of I don't even exactly want to call it an accelerator program, but it lets us work more closely with them and get access to oracles more quickly. And they just work with smaller projects. And we've been with them for almost a year. No, over a year, I think. Maybe even a year and a half at this point in the build program. So Chainlink is always our standard, but in other cases, on newer chains with certain assets, we have to go with others, things like Redstone. It depends on the asset, but that's one I believe is all listed in our docs. So you could see it on a per asset basis. And, if you're very particular about your oracles, you could pick and choose based on that. But yeah, we're always just trying to find the highest standard of oracle. And in some cases, we have to just put something on hold until we have something like Chainlink.
Okay, that's great. We're gonna have AMA with Redstone in 2 weeks, I think, something like that.
Oh, nice.
Yeah, and we've got one guy from this project in this Discord. So, yeah, I think it's gonna be great talk. Okay, so thank you very much. It was really nice talk. It was really insightful, and I had a great time. I think guys that were listening. And they had a great time too. Thank you for coming and for sharing all the stuff with us.
Yeah, I appreciate you having me on. Always great to talk about Dolomite, and there's some fantastic questions. So I think this was a really great talk.
Thank you. So have a great night or day, because you've got all the different time zones. And I think we should keep in touch and maybe talk in the future.
Yeah, for sure. Absolutely. We'll stay in touch.